Yo, what's good everybody? Welcome back to another video inside of part 8 covering all things price action related. Now, today's video is going to be a continuation based off of the previous segment where we talked about, the very basic fundamental truths of market patterns, what they are. I showed you guys my 5 favorite market patterns being, a break and retest, a double top, double bottom, head and shoulders, reverse head and shoulders. And then I also told you guys, just the basic understanding that there are hundreds, if not thousands, of different market patterns inside of the charts that you're going to see and that you're going to repeat over and over. And understanding that, just because I have my 5 favorite patterns doesn't mean that they're going to be your 5 favorite patterns. And understanding that just because I see certain patterns easier doesn't mean that you're going to be able to see these same patterns. You might see different patterns than me. And then understanding that, you don't need to understand and be able to recognize every single pattern inside of the charts. And just understanding that, it's not necessary to know every single pattern. You don't need to know every pattern in order to make money. Now, with that being said, it is very crucial that you identify, which market patterns you see best, and then just be patient for those setups and master that setup and practice that setup over and over and over. And once you get really good at it, you're going to be like unconsciously competent whenever it comes to looking for these patterns on the charts. Like, it's just going to be second nature. Like right now, I see probably 4 or 5 different break and retest patterns just looking right now. With that being said, guys, today's video is going to be a continuation based off of market patterns. We're going to be tying what we talked about in the last video with actually onto the charts. So we're going to go onto the charts today. We're going to find these setups. We're going to find these different patterns, and then I'm going to show you, how to capitalize on different entries based off these. Now, once again, I do not claim to be an expert. I do not claim to know everything about markets or charts or market patterns. I'm sure there is somebody out there who knows far more patterns than me and can trade patterns better than me, and I'm sure that there are people out there that can explain this better. All I'm going to be doing is sharing with you the patterns that I use every single day in my own trading and the patterns that help me be profitable. Now, with that being said, I do have a few setups that are cherry-picked, and I know when people hear that, they're going to be like, oh, this guy, he can, hindsight's 20/20, it's easy to go back and cherry-pick setups. Okay, but ultimately, when you're trading, you should be cherry-picking setups. You should be looking for the most high probability setups, probabilities, where they're so in your favor to where they're grade A setups, and that's all I did, okay? So with that being said, let's dive right into it. We are looking at GBP JPY on the 4-hour chart. Clearly, as you can see here, structure was bullish, meaning higher highs and higher lows. We get to here, and then we break under the last significant higher low, meaning price is now bearish. We have a rejection, pull up, rejection, pull up, and then, as you can see here, price broke through, okay? So now in this ideal, we have in this type of setup, we have a breakthrough support, a very strong support, because we have 1 rejection, 2 rejection, 3 rejection, okay? 4 if you count these. So we have 4 rejections off this level of support. Now we have an extension through that level of support. So what are we doing? We're sitting on our hands patiently, waiting for a pullback into this level of previous support, looking for signs that, price wants to reverse, and that this level of support wants to hold as resistance, and then we're looking for sellers to enter the market in this bearish structure. This is a grade A perfect setup, and then also, as you can see here, I'm going to zoom in a little bit, maybe you can see it a little better. As you can see, when price pulled back into this level of support and resistance, supply and demand, whatever you want to call it, we got a bearish engulfing candle to print. So obviously, this is like money city. Entry, okay, stops go above that level of support and resistance. It could be right here. If you want to go above the last significant lower high, it would be right here. With that being said, and then your targets would be the next level. I do not have the next level marked off, but, you can target this area or, whatever. We're just focused on the market patterns today and finding entries. So now that's one support and resistance example. And then, literally doesn't get any easier than that. Boom, another support and resistance break and retest example. Okay, we had price break through, patiently wait through all this crap of, just choppiness, wait for this pullback up into this level of previous support. As you can see, we have another bearish engulfing candle print. Or, if you wanted a more aggressive entry, you could have got in, really as soon as this candle closed, because that is a massive wick showing that, hey, there are sellers in this area. That would have been my entry because I like more aggressive entries. And then obviously we're selling with the bearish structure. Stops go above support and resistance. I would be targeting the previous lows, which would be somewhere in here. As you can see, the trade would have played out over a good amount of time. With that being said, those are break and retest setups. We're going to be, I'm going to pause the video and then go to the next setup. Actually, I lied. There is one more break and retest setup real quick. Let me delete this. Okay, so I hope you guys understand that break and retest is very simple. Okay, this is a previous level support. We got another retest down in here with the wick. Okay, so we have 2 rejections showing that this is a pretty decent level of support and resistance. We have an extension through with bearish structure. We have the extension through, and then we're waiting patiently for a pullback up into this level. We got that. Once again, price printed a bearish engulfing. Now, I probably wouldn't have got in this trade unless I scaled down to a different or a lower time frame and saw structure flip. Just because, if you're getting into this bearish engulfing, your stop loss is going to be massive. Like, it just doesn't even make sense at this point to get into this trade. You're targeting like a 1-to-1 risk reward. Like, that's just not me. But you could have scaled down to a lower time frame and found maybe on lower time frames and got a better entry. But once again, we're just showing these break and retest setups over and over. We broke through support, we pull back up to retest, it rejects and rolls over. Okay, so on and so forth. But still understanding that these patterns aren't 100%. They're not going to play out the perfectly every single time. Pulling up to the next setup. My white lines, remember, they represent daily levels of support and resistance, supply and demand, whatever you want to call it. As you can see here, we have a double top. Double top meaning price tried twice to break above this level. Sellers into the market. Price pulls back up. Sellers into the market. Okay, so obviously we have a level support and resistance. Okay, and then we have the first rejection. The second rejection, you could have got in with an aggressive entry right here once this candle closed below this level, showing that there is a little bit of rejection. Factor that in with, we know we're at a major level of supply and demand, support and resistance, and we also know that we had a previous rejection that rolled over. Okay, you could have got in right there, or you could have waited for another confirmation such as the bearish engulfing. But honestly, at this point, I wouldn't have got in off this bearish engulfing simply because my stop loss would be massive, and the risk reward isn't there for me. Okay, but like I said, we're just finding market patterns. Now, double top is a market pattern that I like to trade. Double top meaning price tried twice to get above resistance, and sellers into the market and rolled price over. 2 touches on the top. There are like thousands of examples of double tops. They're so easy to see. Like, you could categorize this as a double top, meaning we had 1 rejection being here, second rejection here, 2 times double top. Very simple, right? The next setup that I have, obviously cherry picked, like I said. Let me go to it. Where are we at? I believe it's my head and shoulders pattern. Yeah. Okay. So with that being said, honestly, you could rule this as a break and retest pattern as well, meaning we have bullish structure. Okay, we have the high right here. We have the last significant higher low got broke right here. We wait for price to pull back up into this major level of support and resistance. It did that just like that. We have a bearish engulfing candle print. Entry, perfect. Okay, stop loss goes above support and resistance. And then targeting the next level, which would be right in here roughly. 3.76 to 1 risk reward. Now, do you see how these patterns just play out over and 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 over? Okay, it's going to happen over and over again. Okay, so once again, we have a break and retest pattern. And then we have price pull back up in. This could be considered, a double top pattern, honestly, because we have 1 rejection, 2 rejections, 2 tops. And then also it's a head and shoulders pattern. Factor that in, and that it's a major level of support and resistance. Do you see how like this stuff just builds up and it's just like so obvious to take this type of trade? Now this is a head and shoulder because we have a left shoulder, we have a head, and we have a right shoulder. Now you could be getting in entries here at the shoulder line. Now remember, this would be your aggressive entry. I would not be taking this trade right here because I believe that price is bullish at this point because we have the high, we have the last significant higher low. Price did not break that yet. All it did was reject it and form an equal low, and then price pulled up to here. You could be taking aggressive entries here. I wouldn't. I would wait for the break of this neckline. You could be getting on the impulse right here, or you could wait for a pullback on a break and retest, which would be right here. So let me draw that zone for you so maybe it's a little more clear. This is the neckline. We have the shoulder, head, shoulder. Price breaks through. price pulls back. We're looking for this previous level of support to hold as resistance. You could be getting in, somewhere in here. Obviously, I would scale down to a lower time frame. Stops go above level of support and resistance, targeting previous lows or, next level of daily support and resistance. Very simple setups. Or maybe your perspective is a little bit different. Maybe you don't really view this as a pullback. Maybe you review this more as a pause candle instead of a pullback. So then you view this whole thing as one leg. Oops, let me delete that. You view this whole stretch as one impulse down. Okay, so then you're waiting patiently for this pullback. Okay, maybe that's the case. And then this would be your entry. You scale down lower time frames, look for candle confirmations, and then take your sells based on just a break and retest setup of head and shoulders pattern. See how these patterns will tie together, so on and so forth. Now we're going to jump to another chart and find a few more setups. So the next chart is USDJPY. Very, very simple setups. Once again, it's so easy to identify break and retest for me because I've just done it maybe, 10,000 times. We have bearish structure. As you can see, we extend through there and we pull back up into this level of previous support. We have 2 touches, major daily level of support. That's a really good entry right there on a break and retest setup. Plus we have a bearish engulfing. I like aggressive entries on break and retest setups, but that's just me. So I would enter as soon as this candle prints, showing a wick rejection on that daily level. Stops go above support and resistance, targeting the lows. Very simple to find these setups. Another thing is, with this same exact level, you're going to see multiple different patterns print. So we already discussed the break and retest setup, where we have the break, the retest. Now we also have a double top. We have the first rejection, price came lower. Okay, second rejection, price came lower. So as we're pulling back up to this level of support and resistance, we know that it previously rejected and also previously held as support. We factor that in that, we are at a daily level of support and resistance. And then we factor in that we have, doji candles and weak bullish candles printing at this level, showing that, hey, price is getting weak. It doesn't want to go any further. And then you factor that in that, you could count this bearish candle as a bearish engulfing. Or you could scale down to a lower time frame, see when structure flips in here, and somehow get in on this massive drop. There's just so many ways to get in on this type of entry. Anyways, that is a double top pattern. And then once again, just another bread and butter, easy going break and retest pattern. We have a breakthrough support, previous level of support. We have price pull back up into this level. Obviously, maybe you got in right here off this wick rejection of this level. Stops go above, targeting the next level, 3-to-1 risk reward. Or maybe you're, more of a conservative trader that you wait for this bearish engulfing. You get in at the bearish engulfing. Once again, stops go above support and resistance, targeting the next level, 2-to-1 risk reward. Very simple, guys. These patterns, remember, they're going to repeat themselves over and over and over again. And sometimes they might not, do exactly what you want. But just understand that, patterns put yourself on the, the right side of, probabilistic trading. Now, when you factor in, market patterns, you tie that in with what structure is doing, and then you tie that in with, when you get candlestick patterns such as bearish engulfing, bullish engulfing, so on and so forth. I mean, that just stacks, so many different confluences into your own, for you basically. So whenever you're looking to trade, all you want to be doing is building a case. You're building a case on why that trade is going to work for you, and why you want to be in that trade. So then, like I said, if you're stacking in, you have bearish structure. Factor that in with a break and retest market pattern. Factor that in with we have a bearish engulfing. I mean, those are 3 confluences right there. And obviously, a later video in the section or in this course, we're going to be talking about confluence trading and so on and so forth. But those are 3 confluences right there. Like, you should be taking this type of trade all day long. So that is it. That is what I have for market patterns. Like I said, guys, just remember there are going to be hundreds, if not thousands, of different market patterns. You can literally go to Google, type in market patterns, and there's going to be so many, right? There's going to be all kinds. Just understand that the key is you don't have to know every single pattern. You just have to know which ones you see best and which ones play out over and over and over for you. And then obviously just taking advantage of those opportunities. With that being said, guys, that is all for this video, and I will see you in the next one. Peace.